Welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, September 12th, 2022, and I am pre-recording this Trading Places Live for Tuesday, September 13th. Futures right now are flat. We got the Dow Jones futures up just a couple points, S&P 500, NASDAQ both near the flat line. Looking at what we're going to go over today, let me run you through today's agenda. I'm going to start off with the daily market recap, then talking technically. I'm going to go over leveraged ETFs. Sent out some information to members earlier today. I just want to make sure that everyone is aware of a couple of rules that you really need to live by with leveraged ETFs. So I'm going to spend some time there. Then we'll get into earnings spotlight and wrap up with the three you must see. First, before we get into any of that, let me take you over to earningsbeats.com. If you are new to Earnings Beats, you can go over to our website, scroll down. We have a free newsletter. It's the Earnings Beats Digest or EB Digest. It's published 3 times a week, Mondays, Wednesdays, and Fridays. Normally send it out around 8:30 in the morning. Try to get it out at about 45 minutes or an hour before the stock market opens. This newsletter is very, very brief. It's an easy read, just a couple of paragraphs and a chart. That's normally all there is to it. And I focus on the things that are really important to us at Earnings Beats. So I'm going to focus on things like earnings, gaps, relative strength, those types of things. One other thing, the newsletter is completely free, no credit card required. You can unsubscribe at any time. So if you just like to learn a little bit more about how we approach the market, I think this is a great way to do it. Go over to earningsbeats.com, scroll down, and make sure you subscribe for our free newsletter. Also, I do want to mention that later on Tuesday, after the market closes, we're going to be having our monthly options Max Pain event. So this is a virtual event. We hold this with our members it's always the Tuesday before the third Friday. Monthly options expire the third Friday of the month. So we always take a look at where we stand a few days before, just to give everyone maybe a little bit of an idea of a directional clue, which way the market might go based on the net amount of in-the-money call premium or put premium. So anyway, that's going to be held on Tuesday at 4:30 if you are interested. It does require membership to Earnings Beats, but we do have a 30-day free trial. So if you'd like to join, just click on this and we'll be able to walk you through registering for this event. All right, let's talk a little bit about daily market recap from Monday. So we saw the Dow Jones Industrial Average put on another 230 points. So we have now seen about 1,300 off the low in that neighborhood. Really nice rally here over the last 4 trading days, back up above the key moving averages. That's not just on the Dow, but it's across the board. S&P 500 up another 43 points, closing at 4110. I'm watching 4128. To me, that's a pretty important level. That's where we broke down right here after that infamous speech of Fed Chair Powell's from Jackson Hole. Saw the market sell off all day long. We took out that previous low right there at 4128. Went all the way back down just under 3,900, and now here we are, right back to where we broke down from. So interesting area to watch on the S&P 500. The NASDAQ up 154 points, so on a percentage basis, it was did better than both the S&P and the Dow, and that's been the case here recently. NASDAQ up 154 points, finishing at 12,266, clearly above the 2 key moving averages there. Mid cap, small caps, both up nicely. Mid caps up about 1%. Small caps up about 1.25%. And for the second straight day, every sector was higher. So just like Friday, Monday, we saw all 11 sectors finishing higher for the day. We had leadership from energy, which was up about 1.8%. Technology, 1.6%. Discretionary, 1.3%. And then both utilities and materials up nearly 1%. So really good across the board action there. 10-year Treasury yield. Well, let me just say, first of all, we were up 4 basis points to 3.36%. We're getting very close to that mid-June high of 3.48%. The past several months, really throughout 2022, whatever the 10-year treasury yield is doing, the stock market basically is doing the opposite. So the fact that we are rising here and getting up close to that 3.48%, we actually finished on about a 4-day, 5-day high here. And yet the stock market still put in another high. Very interesting, because we have been seeing a lot of this inverse correlation. And the last few days, we're actually seeing both the yields go up along with the S&P 500. It'll be very interesting if that's the case on Tuesday, because we've got August CPI out in the morning, Tuesday morning, and then we've got the August PPI out on Wednesday morning. So a couple of really big reports coming out these next 2 days. We'll see how the bond market reacts, and of course, how the stock market reacts. But this is going to obviously have an impact as we move into the second half of September, which historically is not a very good time of the year for U.S. equities. We'll see whether or not that is the case this year. Expectations on Tuesday, just to give you a little heads up. Actually, by the time you're listening to this, the news will already be out. But August CPI is expected to drop 0.1%. It was flat in July. So we are expecting just a little bit more of a decline there. The August core CPI is expected to remain unchanged from July, with both months at 0.3%. So July, that was the actual. August, the estimate right now is for 0.3% rise. Then we've got Wednesday, August PPI and core PPI coming out. And we are looking for a negative headline number on the PPI, minus 0.1%. And then the core, a positive 0.3%, which is actually a little higher than July's, which was 0.2%. So anyway, those are the numbers that are expected the next 2 days. It's going to be very interesting to see how these numbers come out. And then, of course, how the stock market reacts to it. Moving on to talking technically, the S&P 500, you can see 4 straight days to the upside, moving through both moving averages, the PPO turning back up again. We are still below the center line, but another day or two of gains, and we'll be right back up into positive territory. If we can get through 41.28, and if you hit this inspect button and go in here and see the low close, that was 41.2873 back on August 23rd. We had rebounded. We were up through the 20-day moving average. It looked to me like we were ready to really just start rocking to the upside, and that's when Fed Chief Powell came out and said more pain ahead. Again, I'm not a proponent of the Fed editorializing. I just want them to give us the rates, give us their thoughts, and let it be just that's that. I think Alan Greenspan, with his irrational exuberance speech back in December of 1996, proved that Fed chiefs really have no better ability to figure out which way the stock market's going than any of us. After that irrational exuberance speech in December of 1996, the S&P 500 doubled over the next 3.5 years. So I wouldn't pay a whole lot of attention to their stock market prognostication abilities. So I thought it was inappropriate. I don't think the market liked it, not because he was talking about more pain ahead, just because I think the market loses a little confidence in the Fed chief when he tries to be a stock trader. Anyway, big rally back here on the S&P 500, getting through the moving averages. If we can get through 41.28, I don't really see anything stopping us from 4,200. I do think 4,200 is going to be a very interesting area because off of this uptrend, this could be a left shoulder neckline. This could be the inverse head. And 4,200, if we get there, could put in the right side of this neckline. And then maybe we get a little bit of a right shoulder in the second half of September. I don't know. We'll see, again, how it all plays out and go from there. The NASDAQ 100, very similar looking chart, moving back up above both moving averages. Because the NDX is a little bit more heavily influenced by technology, I had been a little bit more concerned about the NDX because technology on a relative basis has not been performing particularly well. But technology did really well. If we go back to that opening slide I showed you, technology was the second best performing sector yesterday. So, I think that's a good thing, but it needs to continue. The NDX, if we look at this same low right in here, the low close there was 12,881. We were at 12,739. We got as high as 12,752. Still got a little bit of work to do here, almost 1%, to get the NASDAQ 100 back up to that key resistance level. But like the S&P, if it gets through, I think we could shoot back up over 13,000. 13,129, 13,130. The close the day before was 13,143. That is where I would look if we can get back through 12,881. All right. I want to move on. I want to talk a little bit about leveraged ETFs. And if you trade these leveraged ETFs, there's a couple rules I think that you really need to be aware of and abide by. The first rule, when you look at these ETF or these leveraged ETFs, and I'll show you how they work. But over time, I know that there's a lot of folks who think, well, if the stock market's going to go up, I'm just going to get into a leveraged ETF and I can make twice as much as the market. So if the market goes up 10%, I'll make 20%. Well, if you're holding long term, I can almost guarantee you that if the market goes up 10%, you're not going to make 20% because there's this thing called erosion with ETFs, leveraged ETFs. And so I'm just going to show you an example here. Let's just say at the bottom on the NASDAQ 100, you called the bottom perfectly and decided, okay, I'm going to go into the QLD and I'm just going to hold it. Well, you had this period here where you went up, then you came down, then you went up, came down, you went up, came down, went up, came down. Now you're going up again. Lots of volatility, lots of movement up and down. Now, if you look at this, here's the NASDAQ 100. Now, the QQQ is designed to track the NASDAQ 100. And during this period, off of the bottom to where we closed on Monday, the QQQ rose 14.72%. So if you held the QLD is a leveraged ETF that's designed to go up 2 to 1 at a 2 to 1 clip versus the underlying index, which is the NASDAQ 100. So before we look at the QLD, what I would expect to see is if the QQQ goes up 14.72, then the QLD should go up 29.44. That would be 2 times. When I go down here and look at the QLD, it's not 29.44, it's 28.06. Now you might say, okay, well, I'm okay with that. I don't make exactly 2 to 1, but I'm still making a lot more than 14.72. And if that's your thinking, that's fine. But you just need to be aware that when you hold these and they go up and then they go down, then they go up, they go down, think a little bit like if you had $100,000 invested in the stock market and you lose 10%, and then from there you gain 10%, you're not at $100,000. If you're at $100,000 and you lose 10%, you lose 10 grand. You go down to 90,000. From 90,000, if you gain 10%, you only gain 10% of 90,000 or 9,000. So you go back to 99. So you lost 10%, then you gained 10%, but you're actually down 1%. And the way these leveraged ETFs work, it's very similar. It's the erosion of going up, down, up, down, up, down consistently that ends up costing you, and you don't get that true double. So the double would have been 29.44, right? But instead it's 28.06. How about the triple? The triple 3 to 1 ETF, leveraged ETF, is the TQQQ. Now, at 1472, what you would be expecting is 4416. 1472 times 3 is 4416. We only went up 4149. So we lost 2.7% that we should have had. And that's what I think a lot of folks getting in don't realize. You will lose money over time in terms of erosion. You're still going to do well if the NASDAQ goes up. I mean, if the volatility is really severe, you can see a lot more erosion. What's interesting sometimes is to find points where the NASDAQ goes up and then comes right back down to the same level, because a lot of times your leveraged ETFs will go down more. And you can kind of see that right there with the QLD, these two lows. And then there's the TQQ down even more. So you just have to be careful, because over time, these leveraged ETFs erode. So that's rule number one. You really need to be aware of that. Rule number two is when you are trending in a particular direction, like if you can catch from this low and you hold the QLD or the TQQQ, these 3 days, you will actually do more. You'll do better than 2 times and 3 times. So let me show you the next chart of the NDX. And in this period, I'm going to go back to the March right here. I'm going to go from March 14th close to March 29th. You see this huge move up? Really only 1 or 2 days down in this whole move up, maybe 3. That looks like a third one. But for the most part, we're just going straight up. So do you want to see how the leveraged ETFs do during periods like that? Well, here it is. This is March 14th through March 29th. The QQQ is up 16.81. So the doubling of it we would expect is 33.62. So what did the QLD do? 35.66 versus 33.62. You gained an extra 2%. And it's because of the compounding. Compounding, when you are, this is why for me, I pick my spots when I use the QLD or even the TQQQ, because I want to feel like I'm trending. I want to catch a trend and I want to ride the trend with the leveraged ETF, because I'm actually going to gain more than double. And the triple would be 50.43. Let's see where the TQQ actually went. 56.97. That was an extra 6.5% of return during that period. So while you see erosion when you hold long-term, when you hold through the ups and the downs, the doubling and the tripling effect actually erodes, and you get less than a double and less than a triple. But if you catch the trend just right, you actually make more than double and you make more than triple. That's why I don't hold these long term. When I get in, and if they start to go against me, and I can tell you back right here, right before that Powell speech, I actually had gone into the QLD as we went back through the 20. The very next day, I immediately got stopped out. Once we had that trend day in process, I had stops in play. I got stopped out of everything because I don't want to hold these long term. I don't want to get, look at this. I would have been caught in a mess with the QLD for the next week, week and a half. I'd been going down more than double. So you got to be really careful and make sure you pick your spots and you keep your stops in play. Now I'm going to show you one more example. And this is using the QID and the SQQQ. So it's 2 times short the NASDAQ 100 and 3 times short the NASDAQ 100. And I picked recently, if you go from September 6th through, or excuse me, from August 25th through September 6th, let's go back and look at that. right here. Let's say you decided right there you wanted to go into the QID or the SQQQ to ride this down, and you timed it perfect. Went all the way back down to 12,000. You got out at that point on September 6th. Check out what you would have done here. So the QQQ is down 859. So double that would be what? 1708. The QID was 1909. You picked up an extra 2 percentage points. 3 times this would have been 2577. So what did the SQQQ do? Was it higher than 2577? It was 2946. So again, these leveraged ETFs, if you just hold them, you're not going to get the desired impact. You're not going to get that doubling or the tripling that you think you're going to get. The ups and the downs, you will erode. As long as you finish up, you should do better than the QQQ by owning the QLD or the TQQQ, but you're not going to get your double or your triple. And then the other rule is, and this is the one that I really like to abide. This is the one I like to trade. When I think the NASDAQ has begun a move to the upside, many times these trends can be very powerful. That's when I want to be in the QLD or the TQQQ. When I get in one of these moves, because that's when you're going to do better than a double or better than a triple. Now, as I look at this, I mean, I'm seeing higher lows across the board, really. I don't know about that one right there. But this entire move, the NASDAQ 100 put in a higher low every day. So maybe what you do is you just hold on to the QLD unless you go 1% below a particular candle's, below one particular day's low. So maybe set that QLD if it goes down 1% further than the prior, or maybe it would be 2%. Since the market would go 1%, the QLD would go 2%. Maybe that's where you set your stop and you just ride it until the market takes you out. That's just a possible strategy that you could consider. Anyway, let's move on to earnings spotlight. Want to take a look at Oracle. Oracle reported and closed the after-hours session. Let me see if I can get that for you. Oh, it was up a little more than 1%, I believe. It closed at 77.08 and it was trading at 78.15. So it was up 1.39% after hours. So 78.15 still is not going to clear this. I'd really like to see Oracle get through 80 and close above 80. Probably the open, what I would look for is to see whether or not it can open in the morning above 79.52. That to me looks like the level. If we can open above 79.52, then I think we've got something going. If we open below that level, then I'm not sure we're going to get that breakout. One other stock that reported after the bell was Braze Inc. And this is another software company. And Braze was down 5.5%. So it was trading at the end of the after-hour session. It was trading at 41.16. So let me pull this chart up. So 41.16 would be right in here. It's really not showing much of anything. It's got support down around 37.38. It's got resistance all the way up in the low 50s. I'm just thinking, if it opens down 41, I wouldn't do anything with it. If it can get back down to 37.38, and let's see what the number is on the close. Looks like the low candle body is 37.85. So the closer I can get it down to that level is where I would be interested if I was going to trade it. And if it does go down intraday down to that level or somewhere close, keep in mind you've got a very strong AD line here on Braze. And that tells me that morning weakness many times can be bought. and we'll see rebounds. So if we do gap down 40, 41, intraday get as low as 38 or even into the upper 37s, yeah, might be worth a shot. Let's see. One last thing I want to do with earnings. We do keep a strong earnings chart list at earningsbeats.com, and our members can download it if they have StockCharts Extra or Pro membership. Otherwise, they can just view all the charts, but there's over 400 on the list. So obviously viewing one at a time is going to take a while. But if you're in here and you look at it under, using the summary, view it using this drop down menu and use the summary tab or whatever. I like to sort it sometimes in scooter order. So this tells me all the stocks that are on this list, which, by the way, means the company had to have beaten top line estimates, bottom line estimates, and is liquid and also looks decent on the chart. And if you do all those things, you get on the strong earnings chart list. But I think these are some of the best companies to trade. And if you sort it using this summary feature and then sort it based on scooter, you can get some of the highest relative strength performers. And so PDD, which is a strong broadline retailer, right there, you can see since the March low has been moving up pretty high. Nice. Look at the volume there on the earnings related move. And we've been holding 85 ever since. So really strong support, 65. Very strong support level there. Another stock that's been strong, Enphase Energy and Renewable Energy. Another breakout recently, pulling back, still holding on to that 20-day moving average. I would expect to bounce off of that. Then you've got Celsius Holdings, which is a soft drink company. Ever since we broke out back in August, sideways consolidation. Great support, though, down just below $95. Resistance at 117. I think eventually we're going to break out here. But that just gives you a way to look at some of the stronger stocks on this list just by going back and looking. I mean, here's First Solar. I can tell you First Solar's been on fire. Just continues marching higher with very, very strong volume. All right. And so let's wrap this thing up with the three you must see. I'm just going to point out three ETFs. XLK, I mentioned, it's been a struggle, but it did break above both moving averages on Monday. I think that's a good sign. Just got to see what happens with these inflation reports. The next one I wanted to mention, consumer discretionary. Notice when Powell came out with his speech from Jackson Hole, the XLY now has gotten back up above that level. Very interesting, because if you look at the other consumer group, the XLP, not even close to getting up there. So what does this tell you? Well, it tells me that money since then, even though we had this negative, discussion by our Fed chief and the market came down during this rally, we've actually seen more rotation into the XLY and away from the XLP. I find that bullish. Anyhow, we are subject to what happens these next couple of days with these inflation reports, and we'll just go from there. Everybody have a great day. I'll be back on Wednesday over at Earnings Beats for your next Trading Places Live. Have a great day, everybody. Happy trading.